Good morning, everybody. Welcome to this financial services track. It's the second of two tracks. Yesterday afternoon, we were looking at aspects of banking in particular and what some of the banks were up to from a business perspective. This morning, we're going to take that theme forward and move through the course of the morning into more of a look at what technologies are being employed and what technical architectures are starting to be built. So we'll kick off. I'm very pleased to welcome for the first two presentations. We have Howard and Rolf, and they'll introduce themselves in a moment. And then we'll be taking a break for 15 minutes and coming back with three further presentations. So first of all, Howard Hall, who's the Managing Director of Consult Hyperion in America, based in New York. And Howard's going to touch on the regulations that are coming in. And directives that are certainly affecting Europe and I think spilling over to this side of the Atlantic as well. And the impact that's having on banks poses the sort of question that I think many of us are asking, and that is, will it lead to banks in their own right becoming the identity providers of the future? So I'm going to hand over to Howard.
Thanks, Rob. Good morning, everybody. So I think it's going to be a pretty exciting week, and I couldn't be happier to be here. Identity is literally one of our favorite things to talk about. And we've been doing it for a while now. We've been at it for probably on the order of about 5 or 6 years since we did our first project. And so you're going to hear from a lot of big banks this week. You're probably going to hear from a lot of really smart people inside of IT, large corporations, maybe some of the social platforms. And then you get to hear from me, which is interesting because we're a small firm, right? I think we number about 60 people. We have offices in the UK and in New York. But identity has become really important to us. And we've had the good privilege and the good fortune, provide a little bit of context of why I want to stand up here and share some of our thoughts and ideas with you today. We've had the good privilege and the good fortune for a lot of the people in this room, and particularly this conference, we work for them. So we've worked for the big banks, almost across the globe. We've worked for a lot of the network operators. We've done a lot of work for the IT providers. And probably some of the most interesting work we've done is for the foundations and the NGOs. Some of the learnings that come out of places like Sub-Saharan Africa and Southeast Asia, India, South America, are all places in the last couple of years where we've done some flavor of a project that really involved identity. Our core business historically had been payments, and that sort of has migrated to transactions. And more recently, the thread between all those things or through all those things has really been identity. And so that provides a little bit of context for why we'll stand here today and share some ideas with you and some of the assumptions that we're really starting to form some ideologies around. So with that, we're going to talk about a couple of things today. The overall theme is why banks must become identity providers and why that opportunity exists within the ecosystem today. I think two of the driving forces behind that are things we're going to hear a lot about over the course of the week and some of the things that we even touched upon in this morning's keynote. So let's start with, and I don't think there's any requirement to give a lesson or give a whole lot of background in GDPR and PSD2, but simply said, PSD2, Payment Services Directive, is really about authentication and open banking. So if you sort of plant those seeds and think them as in context as we go through this presentation, I think that'll really gel and sort of becomes a consistent theme that's important as banks think about their role within the identity ecosystem. I think compounding that is GDPR, which is really around data privacy and data monitoring and data handling, specifically as it relates to the consumer and the customer. And so the confluence of those two things, we believe, creates a really interesting opportunity in the identity landscape, one in particular that we believe banks can capitalize on. So the next obvious question is, what is personal data? And I could probably go around the room and ask every one of you that same question, and by and large, you'd give me the right answer. I did this experiment with my 9-year-old son, and he gave me the right answer. So I don't think there's a lengthy discussion or description of what exactly personal data is, other than to say it's not always the obvious, right? I mean, I think we think of personal data in two buckets, direct and indirect. And direct personal data is all the things you would classically associate with your identity. Maybe your name, some identification number. Here in the States, it might be a social security number. Maybe some PAN information, things that could very easily, through a piece of data or coupled with another piece of data, map back to your core identity. It's sort of when you get to the indirect stuff that it becomes interesting and maybe even a little more confusing. GPS data, maybe social media data, combined with maybe a third identifier, not entirely obvious, but again, could lead back to your root identity. I sat in an office in New York about 2 weeks ago, And I'd never stand up here and give you my social security number and my banking information and my home address. You probably wouldn't want it. There'd be no need for me to share that. But I think at the end of this presentation, there's a slide that has my cell phone number on it. And it's on my business card. And you probably find it on my website, and I probably hand it out more than I do any other personal identifier about myself other than my name. It might be my cell phone number. And so I'm sitting in this office in New York. My buddy Roger's got a starter. He says, well, give me your cell phone number. And he types it into his computer. And literally in nanoseconds, he had my name, my social security number, my 3 previous addresses, the various carriers I've had over the last 14 years, as well as the devices that I owned over that period of 14 years. So something as readily and freely as we hand out as something like a cell phone number really has serious implications that need to be thought about sort of in the context of this whole conversation. So why do banks hold information? It's expensive, right? It's expensive to get it, but ultimately they have to. It's a fundamental requirement for the conducting of business. So there's compliance and legal obligations that you're all too aware of, most notably, AML and KYC. Those letters pain everybody when they hear them because they understand and appreciate the cost, the friction, and the frustration that comes about with trying to comply with the legal obligations in order to conduct a banking relationship. There's contractual necessity. You want to buy a home, a boat, a car, procure a business. You fill out a credit card application. You enter into a contract under which you need to furnish some form of credential or some form of personal data that maps back to your core identity. And then lastly, and it shouldn't be overlooked, is banks are trusted. By and large, despite what you might read in the paper and personal experience you're having, by and large, banks are trusted entities. And so we want them to hold our information. We sometimes over-disclose to them because we give them consent, and with that consent, we expect better service, we expect availability to products, we expect maybe offers or rewards. You think about miles with credit cards or things along those lines. So we actually consent for banks to hold that information. So inevitably where this leads is to a structure that we think of as privacy by design. And there's about 4 or 5 different areas of privacy by design that, again, we think all map into why banks can become IdPs as long as they sort of go on this journey to do so. The first is data minimization. We have data as banks, spread across our infrastructure, spread across geography, spread across the world on different systems. And at some level, that needs to be minimized. You need to get down to that core set of data that's really applicable for the business at hand that you're trying to conduct. This data is living in a variety of places. Ultimately, you want to have pseudonymization around that data, right? It doesn't need to be that core information. It could be a tokenized version of that core information, by where if ultimately there was a breach or there was some type of disclosure, the information that was maybe conveyed might be transactional, but wouldn't have your root identity. We just have a random set of numbers in the form of that token, which would be pretty difficult for somebody to do any harm with. Again, as relates to GDPR, and we heard this a little bit in the keynote, the notion of transparency, sharing and being very open with your customers, being very open with the people you serve about what you're doing with their data, how you're handling it, where it's being stored, how you're using it, and allowing for that level of transparency. I mean, GDPR even goes to a level by where, in extreme circumstances, people can have audit rights and can request a view and expect a response of how that data is being handled. And this is a continuum, right? This is by no means something that it's a one-and-done fix. For all the technology, for all the smarts, for all the effort and money being spent towards this, the bad actors are still one step ahead of us, as much as we don't necessarily want to admit that. And you're starting to see things like zero-knowledge proofs and homomorphic encryption, and there's really cool technologies on the forefront, but I think this needs to be viewed, and I think probably is by all of you, as a continuum. So we'll get into the meat of it a little bit. So this is a really high-level topography of what we think of as a typical bank. So banks have changed, right? Banks have grown, they've become dynamic, they've done acquisitions, they've expanded business line into financial investments, into things like insurance products. And across those disparate systems, across those disparate repositories in those remote locations, you have personal data living across all of them. Now this presents 2 problems. Well, the first problem is it's just expensive, and to comply, to manage, to process all that disparate information. It's just an absolutely extraordinary expense that's growing and continues to grow. The second part is you now have honeypots spread across your entire enterprise. any one of which can lead to a financial harm both to you and to your customer. And then the last one is it creates an interesting gaming opportunity for somebody like a hacker or a bad actor, where they may go to, and by the way, bearing in mind that not all this data is identical, right? Some of it has different regulatory requirements, some of it has different compliance requirements, some of it has different storage and security policies. So something like life insurance data, which is typically filled out and stored, and depending upon the type of policy, may be easier to access than credit card or financial investment data. But once I get that, I may have enough knowledge about you as a bad actor to go to exploit some of these other systems. So it creates a really interesting gaming opportunity for the bad guys, where they could get some low-level, low-hanging data, which might not seemingly seem that important, and use it as a way to game the system and get even more data. So we asked ourselves, what should a bank do? And we've come up with what we believe to be about a 4-step process in the way they want to think about this and the way they want to sort of manage their data. So the first step is aggregate, synthesize all that data, and try and get it into one central repository, something that we call an identity store. Then you will use, through the utilization of tokenization, you extend pseudos or tokens to all those other business lines. So if those other business lines are ever compromised, they're getting a token and maybe some transactional data, but the core identity rests safe in some type of central repository. So that's the first step. The second step is use this identity store as an onboarding process internally for your own capabilities. Many of us have multiple relationships with our bank. I had an interesting experience about a month ago. My mother's getting older, right? So she says, well, I want to add you to a bunch of my accounts, and I want you to be the custodian, God forbid something should happen. So we walk into the bank where she's had a, 30, 40-year relationship. I've had a 25-year relationship. I walk in, I get a kiss from the branch manager. She asks about my kids. We talk about the vacation I recently took. I ask about her grandkids. I mean, it's clear there's a relationship that spans decades. We then move into the account portion of our discussion. I get taken into a back room, and they said, well, I need 2 forms of ID, a picture, a utility bill, and some type of notarized document. And I said, the kiss, my kids, we know each other. But despite that, I was still put through an AML and a KYC process like I had never transacted business with that bank before. And so what should have been a 5-10-minute experience turned out to be a 45-minute exercise of photocopying documents and downloading something from the internet and filling out forms. And there's a variety of reasons that's problematic, none the least of which is expensive. It's massively expensive for the bank. The costs associated with that process number in the hundreds of dollars. There's massive amounts of friction around it. My experience, while at the outset was really warm and endearing, and I felt like I was known and valued, the math didn't hang as I walked out thinking, my God, I feel like they don't even know who I am. And I have multiple mortgages and credit cards and car loans with this bank. And then the last point, it wasn't experiential. Well, it was experiential, but it was unfortunately, it was a poor experience, right? So use that identity store for onboarding. Make it that 5-minute, here's a kiss from the branch manager, a firm handshake, they transact something, and you're out the door. So that establishes the identity and the identification portion of what we think is the path to banks becoming IdPs. The next step is the whole concept of authorization or consent. So ask the user, engage the consumer, ask them what they can be doing as part of this, to engage in this process, and thereby where you gain authorization. And then lastly, ask the consumer on their behalf to be able to assert their identity. And so it's these 4 steps which banks are largely doing today. I mean, banks have a massive asset, right? I mean, you look at who's thinking about this stuff. You have the network operators, you have the social platforms, you have IT providers. But banks fundamentally have one thing that nobody else has. They have a massive amount of information that they've spent billions of dollars in aggregate acquiring that are a liability today. All that information is fundamentally a liability. I mean, I understand it helps them do their business for marketing purposes and for a variety of other reasons, and they have to do it for compliance and regulatory purposes. But this is an opportunity when a bank can actually take that, which has classically been a liability, and turn it into an asset, a monetizable asset, and we'll talk about what that means in a few minutes. So it's our contention, in other words, or in very direct words, that banks should become identity providers. The relationship that I have with a bank will be much different than the relationship my children have with a bank, and will be much different than their children have with a bank. And so banks can look to monetize these assets both internally within their own firewall and within their own organization, but externally as well. So that begs the question, can banks be identity providers for anyone else? We've talked about the streamlining and the internal opportunity and the experience that can be garnered with an existing relationship looking to do, different business lines within the same organization you already transact with today. But this is where PSD2, or more accurately called, I think, open banking, really comes into play. It enables banks through this cross-platform, through this open set of APIs, through this very sort of well-formed ideology around security and authentication to allow third parties to authorize access. And that's a very powerful statement, and that transcends an internal bank relationship. It can transcend to a bank-to-bank relationship, a bank-to-merchant relationship, a bank to, and fundamentally it's a consumer. The bank is acting as the proxy for the consumer. And because you have strong authentication for payments, I mean, this architecture is very well understood and largely in place already, and it just doesn't have to be to payments. You can attach any data to that core identity. So you start thinking about health records or business information, it becomes a very strong message. And so at a very high level, this is what something like this looks like. You have the bank on the left-hand side that sort of manages the transactions and the identities. You have the individual in the middle. And then you have that third party, which could be a merchant, it could be another business, it could be a healthcare provider, it could be anybody that has a desire or need to know who you are, and have the bank assert that identity, that core identity on your behalf. So, what should banks do? We believe banks should become identity providers themselves as a starting point. It's logical, it's there, they have the relationship, they have the architecture, the infrastructure, and banks are really smart. Especially from an IT standpoint. I mean, they understand cryptography, they understand security, they understand sort of the authentication protocols. And so it's a very linear path for them to be able to do this for themselves, still bringing down, and I think the real opportunity here is two things. It's to bring down costs, because you don't have to go through that egregious, just annoying process every time you want to conduct a new transaction or open up a new line of business with that bank. And two, it creates a better experience for the consumer. It reduces all that friction. So at a minimum, banks should become identity providers themselves. But with the right architecture, with the right sort of infrastructure in place, with the legal, the confluence, as we talked about earlier, of GDPR and PSD2 coming into focus, it actually puts them in a very lucrative position to become identity providers for other folks as well. So, and that can range all the way from being able to assert a credential to be able to look at a health record, be able to assert a credential to look at a payment record, be able to assert a payment to transact a piece of business with a merchant. It also could be more generally oriented around data and being the custodians of your data. I mean, we're at a point in time in our lives where 80% of our lives are digital. And I had a recent experience where I bought my son a computer a couple of years ago, and buying a 9-year-old computer, you very quickly learn that you buy the most expensive warranty you possibly can. And inevitably, as I predicted, the computer broke, and I went to redeem the warranty, and the merchant couldn't find it, I couldn't find it. After a series of searches and scraping, I ultimately found it, and the warranty was honored. But you think about all the important digitized assets in our life that banks have the ability to store and manage for us. You know, the biggest cost to a bank is customer acquisition. The biggest risk to a bank is customer flight. So at a minimum, you're creating an ecosystem through offering an identity service where, as a bank, you can potentially raise your top line revenues, because this picture, think about interchange, think about what the Visas and the MasterCards did 50 years ago. This picture enables, that third party to potentially become a consumer of that service and pay for it. You can lower costs, so that's pretty lucrative in and to itself. And churn. Churn is one of the things I think keeps bankers up most at night. And so the ability to become that individual's identity provider gives you a really, really sticky relationship with them. One that might far exceed some of the other services that banks are offering, because as much as we hate to admit it, a number of the things that the banks offer are commodity services. and people horse trade out for half a percentage point or for something else over here. But if you're really sticky and you own their identity, you can make business with them seamless and very sort of fluid, I think your ability to preserve those relationships is enhanced substantially. And then lastly, if banks don't do it, somebody else will. I mean, we were having a conversation earlier, Rob and I, it's a question I've pondered, and I think many of us have, is what if Apple decided to become a bank? What if Google decided to become a bank? What if Facebook decided to become a bank? I mean, they could disintermediate this entire process, given the data they have and the data they'd be legally in a position to acquire, and really radically change the landscape as we know it today. So I do think there is a window. I think there's a window of a couple of years. I think that there's good precedent in the market we can all learn from, whether you look at Bank ID or what's taken place in the UK or some of the initiatives in Canada, and those various lessons learned there, as well as some in the emerging markets, where one could argue because of lack of infrastructure, they may even be several years ahead of us. And I guess that brings me to my last point. When I ask the question to banks, they all sort of say, yeah, this is a good idea, we need to be doing it. And when I ask the question to banks, well, why aren't you? The stock answer I get time and time again is cost. And the reality is the business is changing, margins are diminishing, cost is always going to be there. You've made a multi-billion-dollar investment already. You've made it incrementally over years in the data that you've acquired. It's now time to take that next step and build the back end of the puzzle, because if you don't, somebody else will. And that's when I think it becomes really challenging for banks. So that brings me to the conclusion of my presentation. I'll turn it back to Rob.
Thank you, Howard. Now, we've got a few minutes, so we have a couple of questions maybe. Can you wait for the mic to come round, though, because we can't hear with the air conditioning unit behind us if you don't use the mic. So Emma will bring the mic to you if you want to ask a question.
Bjorn Yan, Verizon. So, good presentation, Howard.
Thank you.
I would think that if you're an identity provider, you have to earn the customer's trust. So, or there has to be strict regulations to require the company to conform and their accountability, and there's action to be taken if they don't conform. So, what do you see is required, taking GDPR, PSD2 out of the equation? What else will be required on a global scale for a bank to be an IdP? I say that we're just give an example of Wells Fargo, where a bank may have additional incentives and obligation to the shareholders to make more money, and may use that data for other purposes. So that's kind of the background to the question.
Okay, so I think if I understand your question correctly, so I think that's the golden question, right? That's the million-dollar question that we're all sort of asking. I want my identity to be transacted as seamlessly and as securely as possible. I sort of equated to, about a year ago, I had the displeasure of being on 3 continents in 4 days. I literally was in Europe, South America, and well, Western Canada, so North America, over about a 4-day window. And I got off the plane, and every time I turned on my cell phone without having to do anything, it worked, right? It was that type of experience that I think we all want to see our identities being able to be conveyed forward with. Sort of like the card networks, right? I can turn up almost most places in the world and pull out a MasterCard or Visa, and by and large, I'm going to have a successful transaction. So there's a variety of different things that I think play into your question. I think the trust element's a really interesting one, because trust is not universal. I think you see examples of that. I mean, there are certain places in the world where network operators are trusted more than banks, right? So I think there needs to be sort of, when I think about this, I clearly, because I sit here in the U.S., think about it from a U.S. perspective. But, it is very different across the world, and I think the socio, the demographic, the economic climate of any given market at any given time are going to have, repercussions and have interesting implications about how the right system is rolled out. So, Bjorn, I don't know if that answers your question. Sort of? Okay, I'll take sort of.
So now that I'm in my 50s, I get to say I remember when. And I remember back when I was young, we came out with the ATM machines. At first, the ATM machines were just at a bank, and And sometimes they were at a mall, they were associated with a bank, and you had to look at the back of your card. You had to look at the ATM machine to see whether or not your card fit into that particular ATM machine.
I remember that.
Nowadays, you can go up to any ATM with any card, and you don't have to look at the back of your card. You just know that your ATM is going to work at that, or your card's going to work at whatever ATM that you show up to. So, is there a parallel, and how do you see this going from, used to be in the Navy, what we would probably term this as a good idea ferry landing to reality?
Yeah, so I think if you look at the lessons learned around the world, the systems that have gained traction, so we talk about like Bank ID in the Nordics, or you think about what's happening in Canada, it's been a consortium level approach, right? But I do think somebody needs to put a stake in the ground and begin to sort of build some type of value proposition and understand what the architecture looks like and understand what the ecosystem looks like. And I think that Google will have a place in this world. I think that Facebook will have a place in this world. I do think that all roads lead through the banks, though, because they have the architecture, they have, at least here in the States, a degree of trust, and they have information. They have that sort of ascertained, AML, KYC information. So I don't think, so much the way, there was CIS and NICE, and you and I might be the only two people old enough in this room that still use ATMs, right? Because nobody really uses cash anymore. But if you have kids, you do, right? If you have young kids, you should always give them cash. But, I don't think there's going to be one company that's going to solve this problem. I think it needs to be a fully developed ecosystem. And the same thing happened in the telco world with the MNOs, right? They created partnership agreements. It's no coincidence I can, get off a plane in South America and be on, Movistar, or get off the plane in Europe and be on Vodafone, right? So there needs to be that type of network effect, but spread across a variety of different stakeholders. And I see the large platform players, the enterprises, the banks, the social networks, Google, all sort of being a stakeholder in that world. And I think it'll take multiple years to develop, but I think there needs to be a starting point.
Okay, Howard, thank you for that.
Yeah.
We're out of time now, so just want to thank you again for your time and sharing your thoughts with us today. We're going to move on to our second presentation, if I can get it set up.